So what exactly do you do when you have a dividend stock in your portfolio and it gets called away from you because you have a covered call option and it gets exercised? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video we are talking about my real life dividend stock portfolio, about a dividend stock that got called away from me based on a call option that got assigned. And specifically what we're going to cover in this video is A, what dividend stock got called away, what was the actual setup there with that call option, and B, am I going to pick up that same dividend stock again? And if I'm not going to pick up that dividend stock again, then the third thing we're going to cover is what dividend stock am I going to buy, and based on what metrics do I say it's a good dividend stock to be in my portfolio. You guys know how much I love to talk about dividend stocks and share completely with you what goes on in my own portfolio. You guys also know it's important to me that I deliver massive value with every video I make. So without further delay, let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. Alright guys, let's go ahead and jump right into the content. Let's start talking first off about what actually happened. What did I have in my portfolio? As you can see in my dividend stock portfolio, I had a holding UGI Corporation, UGI, in the utility sector of the economy, 33 consecutive years, of dividend payments. And at the time they were yielding 2.99% and they made up 5% of my portfolios. I owned 117 shares. Now I took the opportunity to sell a call option on this stock because I had at least 100 shares of UGI Corporation. And when I sell a call option, a covered call option in this case, what I'm essentially doing is I am creating a contract and selling it to another individual, an investor who is buying that contract. By selling that call option, I am agreeing to sell 100 shares of UGI Corporation to that other investor, the buyer, at a specific price. That's the strike price. That specific call option expired July 16th, 2021, and the strike price was $45 a share. Now, as you can see, over the past 30 days or so, UGI Corporation has been right around $46, $47 a share. It got down actually right before the option was exercised. It got down to $45.02, but ultimately on the 21st when it was assigned, it was right around between $45 and $46 here, which means that because it was above the strike price at the end of the expiration for the call option, that call option was assigned and my shares were called away from me to whoever owned that call option. Now, here's the deal with what happens here. When a call option gets assigned, I am not losing money. Okay, I want that to sink in here. With covered calls, if my call option gets assigned, I am not losing money. The stock was worth around $43, $44 a share when I sold the option, and it happened to have a growth streak and it went up. The stock price went up. And as a result, I captured the growth from $43 to $45 a share. That was mine, it was given to me, as well as the dividends that were paid to me during that time frame. What I did lose was about $1 per share in growth. It was worth around $46, so I don't know, maybe $100. That's all that it was opportunity that was lost, not actual cash. So then the question here becomes, now that I have this cash that I need to reinvest, what is the best way for me to reallocate this capital? As you can see right here, I still own, 17.215 shares of UGI. So at this stage of the game, what makes the most sense here for me to do? Is it to reinvest back into UGI Corporation, or does it make more sense for me to pick up a different dividend stock and then sell out of this last $794 of shares that I have in UGI? So to answer this question, let's take a look at our dividend stock spreadsheet here. Let's take a look at what UGI looks like, and then we'll also compare it to what are some other options I have available. We're looking at our July 2021 dividend stock spreadsheet, which is part of the Patreon community if you want access to it. In addition to all of my spreadsheets that I make available to the community, I also give additional dividend content. We talk about the actual moves that I make in my own portfolio and when I make them, and I share that information with you guys. I also answer questions in the Patreon community, so if that interests you at all, check out the link in the description below. Okay, so we've got our dividend stock spreadsheet here. Let's go ahead, let me go ahead and keep filtering this out here. Let's take a look at UGI Corporation and see the individual elements there. All right, so UGI Corporation is in the utility sector of the economy. It's got a current price per share of $46.20. Their growth rates here, the 1-year dividend growth rate year over year is 2.3%, which, I chalk that up as just being part of COVID, so it's not that big of a deal to me. Their historical 3-year growth rate is 9.75%, and their 5-year growth rate is 7.73%, which is both higher than inflation. Those are great dividend growth rates. Then we've got their dividend yield right now, 2.99%, and then historically over the past 5 years, their yield has been right around 2.59%. So these numbers are honestly a little bit low for me. I'd like to see dividend yields of at least 3.5%, 4%. My actual average Joe portfolio is yielding, weighted portfolio yield is 4.76%. So I really don't want to have too many yields below 4% because I like to keep that between 4 and 5%. In fact, if I sort here by yield, you can see that I've got some that are really high here, like the covered call ETFs, and I've got my Schwab equity ETF at 2.89%. Then the only one yielding lower than UGI is Broadcom, but Broadcom has some excellent dividend growth rates, and their overall growth it's a great balanced dividend stock. So ultimately, I'm thinking that I want to drop UGI and move on to a different company. So now the question becomes, now that I told you what happened, and now that I know that I don't want to buy back into UGI, I just prefer to pick up a different dividend stock that's got better metrics, better dividend yield, better dividend growth rates. What am I going to buy? Let's jump into the spreadsheet and find out. By the way, if you were part of the Patreon community, you already were aware of what I did here. So if you'd like to see what I do in my own portfolio and when I do it, you can check out that link in the description below. They were aware of what I did with this stock on Monday, the 26th. All right, let's go ahead and get out of here. And let me just share with you some of the few metrics that I like to be aware of here. I want to make sure that I buy a dividend stock that has a yield of at least 3%, a minimum 3%. So let's go ahead and start there. We'll go ahead and filter here, and we'll say greater than or equal to 2.999%. All right, next step here, I want to make sure that my payout ratio based on free cash flow is less than 75%. That's this number right over here, payout ratio based on free cash flow. We're going to go ahead and go in here, and we're going to do a number filter. Actually, we're just going to do a filter by color because everything is filtered green, keeps me below 75%. These are all the companies here. So now we went from like 600 or 700 stocks to now we're looking at just 128 here. Let's go back up. Let's also sort by their growth rates here. Now I will give a little bit of leniency here, leniency, I can't even talk today, for dividend growth rate for 1 year because of COVID. But for the 3-year growth rate, I want to see green here. I want to see at least, I think it's 4%. Let's go and do it filter by green. And we'll do the same thing for 5-year growth rate as well, filtering by green. So now we've got, instead of that 128, now we're down to how many stocks? 104 different dividend stocks that we can look at. What I really want here is consistent growth across the 1, 3, and 5-year growth rates if I can get it. And I'd like to get as much yield as possible for that. And I'm also gonna be mindful of what their average 5-year yield is as well to get an idea of where they're supposed to be historically. We've also got our dividend streak here, number of years that they've been growing their dividend. And we've got free cash flow per share over here and their annual dividend. So let's take a look here. We've got Delek Logistics, which is a great energy company. I haven't quite bought into it yet. I'm not quite sure if I'm going to, maybe in a future month or two when I've got additional cash to invest, I might look at Delek Logistics, but anything in the energy sector right now is just a little bit up in the air. Still a lot of volatility there, so I just haven't bought back in there. So we've also got Arbor Realty, Westlake Chemical, which I already own in the portfolio. Hennessy pays only once a year, so I'm not really looking at that one. I've already got Manulife in the portfolio. I'm looking to not add financials, I'm thinking, just because I've already got 4 or 5 companies in the portfolio that are financial or bank related. So I've already got Westlake Chemical on my list. I've already owned, I just recently bought into Northwest Bank shares. I also own Star Group right here. I own MFC already in the portfolio. I already own AbbVie. So I was looking to add something new here, not related to financials. And one of the companies that I was really looking at closely was Universal Corporation. It's tobacco related, that's their main business. I just ultimately, as an entire industry, I'm not quite sure if I want to buy into this given, their future prospects. Not to say it's a bad investment, it's just one that I'm not really, there's just other options available, so I'm not gonna buy into it. I'm not really looking at real estate companies. I've already got strong REITs in the portfolio. And I also, in addition to the other metrics, I also wanted to pick up a company that was at least a contender or a champion. Since I was replacing a champion with another company, I didn't want to pick one with a smaller dividend streak, or if I was going to, I wanted it to be still a very strong component of their dividend history, something they've been raising dividends for at least 10 to 20 to 30 years. So essentially, I factored out the challengers. Okay, not to say that, I mean, I own challengers in my own portfolio. I just wanted to move into something that was a little bit more consistent and had a longer growth rate. So after factoring the yield, the dividend growth rates, and getting rid of financials here from the sectors, we're left with very few companies that are options to buy into. I already own Star Group. I already own 2 healthcare companies, so I'm not buying into Pfizer. Not looking at any limited partnerships really. So when we factor in this short list here, guys, of stocks that are available to purchase, the one that I ended up going with here is PetMed Express, PETS. It's in the consumer discretionary sector of the economy. Current price per share, $29.29. It's gotten really strong growth here. Even during COVID, 4.59%. 3-year and 5-year growth rates, 8.2 and 9.32%. Current yield, 4.1%. And their historical growth rates are around 3.5%. Been raising dividends consecutively for 12 years. And it's got strong payout ratio based on free cash flow as well as based on net income as well. Let's take a little bit deeper dive into PetMed. So this is PetMed Express, their maximum price history. They've been in business since 1997, but let's go ahead and look back more like 10 years here, and you can see that it was worth $10 a share back in 2011. It's gone up from 10 to almost as high as 50. It came down here again pre-COVID. And during COVID, it really didn't have much of a drop here. It's been staying relatively constant. And one of the things I love to have in my own dividend portfolio are companies that are consistent and balanced with their type of product. When we think about, corrections in the stock market, and we think about, big things that happen in life, what do most people continue to pay for? Well, they continue to pay for groceries. They will continue to use household products, and specifically here, in this case, I think that they will continue to take care of their pets. Now, of course, if there's like an apocalyptic, I cannot talk today, apocalyptic event here where, we're just trying to survive, then I think that's out the window. So is your stock portfolio, by the way. But with PetMeds, a lot of different pet owners will continue to buy flea and tick medication. They will buy ongoing prescriptions for their aging pets. And I see it as an interesting play here. Not a big one in my portfolio, maybe 4 to 5% of the portfolio in keeping with some of my other positions. But let's go ahead and look at some of the metrics here for pets. As it says here right on their website, over 11 million satisfied customers have saved money with us, America's most trusted pet pharmacy. That is what they do. You've got medications for joint care, for pain, heartworm, dental supplies, medications, even some dog food you can purchase in here. Anything related to pets and caring for your pets, you can see on this list here. Ultimately, as you look at my portfolio, guys, it's not going to dramatically change it here. You can see that if I sort by sectors of the economy that are in my portfolio, we can see we've got a business development company with Aris Capital. We've got Walgreens in the consumer staples. We've got 2 covered call ETFs and my strong dividend ETF here, my base core ETF, SCHD. Then we've got financials. We got 4 different financials companies, 2 healthcare, 1 industrial, 1 information technology, 1 materials, 2 in real estate, and 2 in utilities. And then here with PetMed Express, it's consumer discretionary. It brings my core dividend yield up, at least it's going to, because it's a higher yield than UGI Corporation. And it's got just as good, if not better, growth metrics than UGI. Make sure to leave your 2 cents in the comments below, guys, about what this video was, what you thought about it, what you want to see more of. I am going to be talking more about individual dividend stock matchups by looking at communications, healthcare, things like that. So if there's specific dividend stocks you want me to compare with respect to their dividend payments, dividend yield, overall total return history, and all those individual things that'll help you make an informed decision, let me know in the comments below. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.